Hello guys. For those people who are investors who want to invest, I will just try to make you understand what's the difference between these two kinds of stocks, or what we call companies. There are some that are called growth companies, other companies are called dividend companies. Okay, now what does it mean? Some stocks, they don't give a dividend. A dividend is a cut from the price of the stock itself. So it is not something that the company gives from its own pockets. The earnings, real company earnings, the company doesn't give you that. Understand that. But a lot of people who invest in dividend stocks, they don't understand anything about this. And some foolish people online, they assume and they try to teach people how to invest in these stocks and how to make money. And these guys, the teachers, those teachers and their students, all they are, I don't know where they live. Maybe they don't live in our planet. They live in another planet. Okay? So, the company, when it gives a dividend, it is not from its real earning. It's just from the stock itself. If you go to the stock when we have the earning, when we have the X date, you find that the stock will be going down according to what it gives. Now, other companies, they don't give dividend. Why? It means they leave the stock as it is, and because the people, they like its growth or the growth of the company, they buy these stocks. That's why a lot of stocks of these stocks go faster than the other ones. Okay? Understand, if a stock gives 2% each year or 3% or 5%, from where it gives this 5%? It gives it from the stock itself. If the stock is $100 and it gives 5% yield each year, so from this year it's $100, next year it will be $95, because they give you $5 from the stock price itself. Now, if there are some people who buy the stock up or down, this is another thing. I'm speaking just about the dividend. Some other stocks, like Facebook, for example, it doesn't give any dividend. But the stock in 5 years, it was $17.55 in 2012. Now it is 140. Try to understand. From 17.55, let's say it's $20. Now we have 5, 6, 7. It is 700% profit. Tell me, what is the stock that it is giving dividend, getting 700% in 5 years? None. At the exception, maybe 1 or 2, but none. Why? It's just because the people, investors, some investors, they like faster stocks. That's why they buy them more. They don't like this kind of stocks that are slow. Each time the dividend takes some money from the stock, each time. So the stock is going down, and the people, they don't understand that it is going down. And the money they get, it is only the money of the stock that they took from the stock. It's not a check coming from the company itself. Understand that. Some people, they have no idea what is a dividend. They teach dividend, they have students, and all they are confused what is a dividend. That's why almost all of them, they lose money. Students and teachers, they lose money. Okay? In order to have or to be in a dividend, you should have a lot of money. I will give you an example. You have $10,000. You buy a stock or 2 stocks that have a dividend. Let's say this stock is 5%. Now, Your money is $10,000, right? Next year, in the same time, how much you get? You have $10,000. They take $500, okay, which is 5%. They give it to you. So how much you get? You get 9,500, which is your stock, and you have $500 that is in your hand. You see what I'm talking about? Now, in order to make money, you should have a lot of money in dividend, a lot of stock. It means a lot of the buying power should be a lot. For example, I give you the example of $10,000. In each year, you get $500. It's little money, right? From $10,000, little money, yes. Let's say you have $1 million. You can have $50,000 from the stocks. Is this a good money? Yes, it is a good money. Now, but you should have 1 million, 2 million, 3 million. Understand? Do you have $1 million in your stocks? No, you don't. Most of the people don't. So how can you go and invest in dividend? The less money you have, the less money you get from these stocks, and it is taken from the stocks itself. So the growth is going slower. Okay? If you have $100,000, you bought Facebook in 2012, you stayed until now. How much you have? $700,000. So from 100 to just 5 years, you get $700,000. This is a big money when the stock is a growth stock. Okay, if you buy some big blue chips stocks, how much you get? You will get less money. Why? Because these stocks are big and they don't go that much. They don't go that much because they are bigger stocks. People, they think because they are big, there is a certainty they don't go bankrupt. But if you are losing 10% to 20% or 50%, what's if they stay 100 years? What's the deal? If they stay 100 years or they stay 1,000 years? If you are losing your money, what's the catch? You are losing your money. You are losing your money. Why not put your money into a stock that go fast, like a growth stock, and you can double your money in 2 years or 3 years? It's better than to go with old companies and stay where you are. If you have a lot of money, it's okay. You have $1 million, you have 2 million, you have 3 million, and you are a retired person, and you have a lot of money. You put them in big blue chips and other stocks. It's good because you are getting 50,000 or 70,000, and you will live well with your dividend. Okay? But if you don't have money, you have 10,000, 5,000, and some people online, you go them, how to invest in dividend stocks? You are making money. The company will give you money. No, the company will never give you money. From where it gives you money? The money goes to executives. I will show you something that you understand truly, that the company doesn't give dividend from its own earnings, real earnings. Okay. If you are working for a company and it has a 401k, this is I will show you by proof. If you go to 401k, you will find mutual funds and you don't find your company stock. There is no. But the company matches what you put each paycheck, and it matches it with 50% or 100%. For example, if it match 100%, for example, you put $100, it gives you $100. From where you get this $100 since you don't have the shares of your company stock? You have only mutual funds, and they are not your stock. Have you understood now? The company gives you from its earning money, although you don't own the stock. And I own the stock, and they don't give me from that money. They give me from my own money, which is the stock price, and they cut some money and they give it to me. But it is my own money, but it's just a game that company and the whole system does in the stock market to show that the company is giving money, but in real it doesn't give. And for those people who don't understand, you can take my training level 16, how to invest in dividend stocks. It means it shows you the kind of stocks, of dividend stocks, the stocks that are taxed very high, the stocks that are not taxed very high, how much money you need in order to make money. A lot of stuff that I will show you explaining these crucial things. At least you have, even if you don't want to invest in dividend stock, even if you want just to understand how things work, you can get my training and you can get a clear idea. If you don't understand what you are doing and you don't understand how things work in the stock market, you will be losing money and you don't know. Okay? If you go online, they give you sometimes some definitions that in real it is false. It is false. But they give it because it is the way it is written and the way the people accept it, and that's it. But in real money, you will see that you are losing money. You are not making money. And this is the difference between dividend stock and growth stock. Okay? Please, if you have some questions, ask here. Send me a private message if you have some real questions or private questions. And thank you very much. Please subscribe to my channel and share it. Thank you.